The material discussed in this program is for information purposes only. It is not intended to be used as a recommendation for investing or as legal advice. Each person has his or her specific situation, circumstance, and objective, and should consult their own personal advisor or counsel. Joining me now in the studio to touch base on the economy, as we do every Thursday, Jason Calcote is here from Citizens Trust and Investment Corporation. Jason, good morning.
Good morning, Scott.
Thank you for being with us.
Thanks
and been kind of a wild ride last week or so, huh?
Yeah, it has been. We've gone from red last week to back up in the green territory this week.
Right. Which is good.
It's good.
I guess, right? If you're watching things and you've got money in the market, so.
Yep, which most of us do. Right now, it really is volatility is the name of the game right now. We've got this index called the VIX, the Volatility Index.
Okay, right.
That tends to measure current market expectations, really, based on the sale of S&P futures. So we've got people trading where they think the S&P is going to go, whether they think it's going to go up or down. And this index is kind of a measure of how big that spread is going to be. Okay. It's also called the fear index by a lot of people, just because it sort of measures, the current state of the investor's mindset, where, if they think there's going to be a big jump one way or the other in the S&P.
Sure.
And so we've got a spike in that, obviously, because we took a big dip last week after this pretty strong bull market run. And now we're back up in the green territory. So this indicator has kind of spiked, indicating that the wild ride probably isn't over.
Right.
I think we might have a bumpy end of the year.
Interesting. Okay. I know people get nervous during the month of October, it seems. And, of course, now we're out of October, so things have, who knows?
Yep. Typically, October is a bit of a sell-off month. You've got midterm elections coming up, too, so that tends to have some kind of way on the market as well. Again, it would be a good idea to keep an eye on the VIX index just to really see if this is going to sort of slow down and calm down, or whether we're going to have this sort of bumpy ride out to the end of the year, really.
Right. Interesting. And it's a pretty good, I guess, predictor from past?
Kind of. It actually doesn't measure much historically.
Okay.
It's all real current. So a lot of people
real-time stuff.
Yeah,
almost,
they'll try to use it
see.
to time the market, actually. Some people will.
Which you always tell us is a horrible idea.
I would not recommend doing that,
Right.
yeah. But
Right.
you can get a sense of just how choppy the waters are going to be that day.
Gotcha.
By looking at the VIX. And again, it's a current indicator, so I mean, you already know what's going on out there, but that's just kind of a reaffirmation that
confirms it.
Right.
I suppose.
Right.
Okay.
Right.
Interesting. All right. What else is going on?
Well, so we've got some big players that are kind of making some big moves in the market right now. GE is one of the big newsmakers from the other day.
All right. General Electric used to be a big corporation, lots of different business lines and things like that.
Yep, and they're in some hot water right now. They're struggling right now. They've got a new CEO. The shares plunged almost 9% yesterday.
Ouch.
Yeah, ouch, because he talked about cutting the dividend to a penny a share.
Their CEO.
Their CEO.
Yeah.
Typically, GE has been one of those stocks where people sort of take a safe haven from the volatility because it's a dividend-paying stock.
Right.
So interesting to see a stock like that get hit, and a haven for some people from this market volatility really not be there for them this time around. So we'll watch GE closely to see what happens with them and their new CEO, to see how long maybe his tenure is there.
Right. Okay. Interesting.
Another big mover, Facebook. They did really well in the third quarter. They exceeded third quarter expectations for their earnings. They've been one of the pushers of this bull market that we've seen for the past 2 years. The FANG stocks, Facebook, Amazon, Netflix, Google. Okay. The tech stocks that have really been driving this.
Sure.
Facebook took a big hit last week. They were one of the ones in the NASDAQ that really caused it to plummet last week. But they are up again. They exceeded their earnings expectations, so they're on track to finish out the year strong, which is good for the markets.
Interesting. Okay. What else we got?
Another number that came out, the jobs report,
right,
which is the amount of workers that are employed by private companies. They added about 227,000 jobs in October.
That sounds good.
Right. It was supposed to be around, the forecast was around 187,000. So, again, strong economic numbers, even though we've got this market that's kind of bouncing around. We got to remember that the underlying numbers are still strong for the U.S., so... and then just one more to talk about. General Motors is up a little over 9%, which is great, for the U.S. car makers. So expect to see, that have some positive impact on the market going into the end of the year as well.
Interesting. But it really is fascinating to me to kind of watch some of these news reports about some of the strong economic indicators, but then you get some of these other kind of stories that say, but you've got this happening, and maybe interest rates are going up too high or too fast, or the Fed wants to raise them even faster, and you've got inflation, and all. It just kind of reaffirms, I guess, how complicated the economy and economic activity can be when you try to control it, I suppose.
That's definitely true. There was a statement from the Fed saying that they would have had to be a whole lot more of a hit than we saw, because we got close to correction territory. We were actually in it for a little while with the S&P.
By definition.
Right, by definition, 10%. But, they said it would take a lot more bleeding than that for them to slow down their plan for the interest rates. So,
interesting. Okay.
Yeah, again, interesting. A pretty aggressive stance from the Fed.
I would think so. We've got a few graphs to look at the markets just real quick, which probably will confirm what we've been talking about this morning, that things did take a plunge last week. Yep. And there it is.
There it is.
That's the Dow Jones, right?
Yep.
And it's lower.
This is the Dow. Yeah. At that plunge, it actually wiped out the gains for the year.
Right.
So at the bottom of that trough, now we're back up 1.6% year to date. So we are back up in the green for the Dow, which is, everybody likes to see that, especially after such a strong run.
Right. Interesting. Okay. This is the S&P.
S&P.
Same kind of looking graph.
Right. They tend to fairly track each other fairly well. It's up about 2.5% over the past couple days. It did climb out of the correction territory of 10%, and we're up about 1.4% for the year for the S&P.
Okay. All right. And NASDAQ is that tech-heavy index.
Mm-hmm. The NASDAQ is the biggest mover. At the plunge and for the year, we're actually back up in the green in the NASDAQ by a lot. We're up almost 6% year to date for the NASDAQ. So, there was a big bump in the road in October, but if you stay the course, don't panic, don't sell at the bottom. Don't realize those losses.
Right. Well, and that's what you always tell us, is that you really have to be in that comfortable territory, and if you're in it for the long run, these little ups and downs shouldn't bother you all that much.
That's right. If you're comfortable with your investment objective, if you're comfortable with your strategy, then this is something that you can wait out.
Right. Very good. What about oil and gas? How do those markets look?
Oil and gas. Oil has slid quite a bit over the past 2 weeks. I'm not sure if it's part of this volatility that's affecting it, if there's other geopolitical things that are going on. It's about $65 a barrel right now. So down really quite a bit from where we were at a couple weeks ago, up in the mid-70s.
True.
And then gas is really just hanging around. We're at about $3.27. So, it really hasn't moved a whole lot this year. It's staying fairly stagnant.
Right. But that's where it is.
That's where it is. We'll hope for it to pick up a little bit. And then everybody's favorite safe haven, gold, is a little over $1,200 an ounce right now. So kind of treading water as well.
Okay.
Which, if you're scared of the volatility, that's an okay place to be.
That's where gold is.
Right.
All right. Jason, thank you so much.
Thanks for having me.
Always appreciate your insights and you being here. Thanks so much.
Thanks.
Jason Calcote from Citizens Trust and Investment Corporation, my guest here on KSJE.